Right. Good afternoon, everybody. Good afternoon to everybody that has joined this webinar session. It's good to have everybody in the room. Kindly let us know in the chat box where you are joining in from. It's good to see you, Mr. Gabriel Abubakar. I can see Mr. Osita Amalgu. I can see somebody's hand up. Please, can you help us use the chat box? That would make it easier for us to maintain communication. Welcome in Nkiru Anachebe, Chinonso Madura Kolam. You're welcome. It's good to have you here. Abdullahi Olisa, it's good to have you. I can see Arise Kola Aziz. It's good to have you here. Thank you for joining in. Thank you to everybody that has joined in from today's webinar. Thank you, Mr. Tumininu Olaoluwa. Thank you so much. From Abeokuta, it's so good to have you. Somebody is joining in from Canada. Thank you. Thank you. It's good to have you. Chinonso from Canada. So good to have you here. Please let us know where you are joining in from. It will be nice for us to know where everybody is connected from. Welcome. And especially if this is your first time, you are very much welcome. We're very glad to be able to connect with you. Yes, I have Christiana from Abuja. Good to have you here. Michael from Lagos. Good to have you here. I can see Obots is joining in from Lagos. Nehemiah from Yobe State. Thank you so much to everybody that is joining in. Today we're talking about choosing the right mutual fund and what every investor should know about it. Thank you, Joy from Port Harcourt. Thank you for joining in. We're going to be starting very soon. I think I'll just give about 2 more minutes for us to have more people join in. Abasiodu from Lagos, you're welcome. It's good to have you. So we have people from Lagos, from Port Harcourt, from Yobe, from Canada, from, all over the world. This is so good, so good to connect. From Abuja, it's so good to connect with all of you. Anam is joining in from Lagos. Thank you so much for joining in. A lot of us may have heard about the benefits of investing in mutual funds. And you may have wondered which mutual fund best suits your unique financial goals. And that's all we're going to be talking about today. So please invite your friends. A lot of people have subscribed to be a part of this webinar. If you know anyone around you that needs to be here, this is information that could shift the trajectory of your life. So please ask people to join in. It will be nice to have everyone join in. The beauty of today's webinar is that I'm not going to be doing this alone. I have my colleagues here with me. Stella Awuzie is a portfolio manager here at ICO Capital. Hello, Stella. It's good to have you here.
Hi, Brenda. Good afternoon, everyone. It's good to be here.
Okay, I also have Aderonke Adekoya, portfolio manager as well here at ICO Capital. Hello, Ronke. It's good to have you here.
Hello, Brenda. Good afternoon, everyone. It's good to be here.
Okay, last but certainly not the least, I have Unzube Anoloe, who is a wealth manager here at ICO Capital. Hello, Unzube. It's good to have you here.
Hi, Brenda. Good afternoon, everybody. It's great to be here. Thank you for having me.
You're welcome. Okay, my name is Brenda Egwakide, and I'll be your host for today's webinar. Thank you, Nkiru from Lagos and Abasiodu also from Lagos. Please feel free to drop your comments and questions in the chat box, and we'll be sure to respond to them as we go along. So let's get right into it. Let's get into the meat of today's conversation. And today, my first question goes to Stella. And the essence is that I'd like for us to build the foundation for today's discussion by answering the question, Stella, what exactly is a mutual fund?
Okay. A mutual fund is a pool of money, right, collected from many investors to invest in either a specific asset or different asset classes like the treasury bills, bonds, equities, right, or a structured note, right? Now, these funds are professionally managed by experts who select and manage the assets to meet specific investment goals. Now, think of it this way. It's more like a cooperative bus ride, right, to wealth, where everyone contributes, and then a skill driver, who's the fund manager, takes the wheel and makes sure that they meet the objective of the fund.
Oh wow, very very well said. I definitely like the analogy of a cooperative bus ride, and the fact that we are being driven by a skilled driver who is the fund manager. Thank you so much, Stella, for making that so easy for us to understand. So I'm coming to Ronke now, and my question for Ronke really is, what are the different mutual funds that exist, and what can you tell us about these mutual funds?
Thank you for that question, Brenda. That's a good place for us to start. So I'll talk about some categories of mutual funds that are quite common in Nigeria. Now, what kind of investor are you? What mutual fund should you be looking at? You need to know what risk appetite do you have so that you can match that to the mutual funds that you plan to invest in. So first of all, we'll talk about the money market mutual fund, which is the most common mutual fund that we all know. If you have short-term goals within 90 days to 1 year, perhaps you're saving for your rent, you're saving for your wedding, or you're just trying to build an emergency fund, this fund would work like a savings account for you, but then it gives you better returns than what you would ordinarily earn. This fund is low risk, and because it invests in short-term low risk assets like treasury bills, commercial papers, fixed deposits. Because this fund is quite simple to understand and it carries very low risk, this fund is very popular among investors. And in Nigeria, it makes up about 55% of the total mutual funds in the country. But we need to take note that this is not the only mutual fund that is available for you to invest in. Now, the second fund I will talk about is the fixed income fund. This fund focuses on longer term debt instruments, such as government bonds or corporate bonds. If you're looking for a fund that will give you stable income in the medium term, let's say you have an investment tenure of about 2 to 5 years, then this fund could be ideal for you. In the long term, it ensures that your returns will be typically higher than what you get in the money market fund. But then if you look at it in comparison to some other funds like the equity fund, it would be lower. And now that will take us to the equity fund that we have. Now, if you like to take risk, if you're looking for higher returns, if you say that your goal is that you want to build wealth and beat inflation over a long period of time, you would typically go for this fund. So what this fund invests in is the stock of publicly listed companies. Those are companies that are listed on the NGX in Nigeria. And you have to take note that their return can be quite unpredictable. The market could be up today and then go down tomorrow. Because of this, this equity fund is usually recommended to younger investors that have a longer period of time to be able to overcome this market volatility. The funds can also, your equity funds now can have a particular investment style or focus, whereby maybe invest only in value growth stocks or large cap, small cap stocks. So you need to actually do your due diligence and make sure that you know what your equity fund is investing in before you enter into any fund. Now, we've mentioned a couple of assets. We've mentioned equities, we've mentioned treasury bills, we've mentioned commercial papers, fixed deposits. In the balanced fund now, we have a mix of all these different assets that we've mentioned. This fund acts like a middle ground whereby all these assets come together and help you balance both growth and also safety. And then it helps you to, it gives you an edge over inflation. If you're a parent now, you're saving for your child's university education in the medium to long term, maybe 5 to 8 years, then you could look at investing in this fund. It gives you better returns over a longer period of time because the assets are well diversified, which helps you to reduce your risk as an investor. Now let's move on to the dollar fund. If you want to move abroad and purchase a house or further your education abroad, then this fund could be for you, because the dollar fund is targeted at investors that have dollar-denominated obligations. So you invest in assets like Eurobonds, global equities, treasuries, US placements. If you want to invest in these assets directly, you might need high minimum amount of, let's say, up to $10,000 or $100,000. But with a mutual fund, you can easily access all these assets and hedge yourself against currency risk. Now, the last kind of mutual fund that I'll be talking about is the specialty fund. This fund is for investors that have unique needs. For instance, let's say you're interested in investing in a fund that has ethical considerations. You have funds like the Allow funds for Muslim. If you also want to focus on, let's say, a particular gender, then there are funds out there that available to you. If you want to focus on a particular sector, maybe oil and energy, you have infrastructure funds as well that you can invest in. So those are some of the common mutual funds that we have in Nigeria. Thank you.
Oh, wow. Thank you so much. Thank you, Ronke, for this. I mean, if I heard you correctly, you've talked about the money market fund, the fixed income funds. You've talked about the equity funds, the balance funds, the dollar funds, and then, of course, the specialty funds. And one of the things that you said that actually struck me is that the money market fund accounts for about 55% of the mutual fund market. So I want us to talk a bit about numbers. And I'm going back to Stella on this one. Stella, in terms of industry size, right? What kind of growth have we seen in respect of mutual funds?
The Nigerian mutual fund industry has actually experienced phenomenal growth, right? So let's backtrack a little bit. In 2011, right, we're moving around the 75.5 billion, right? And now currently, this is at H1 2025, based on SEC, we're about 5.98 trillion, right? That shows that we've seen trajectory growth from 75.5 billion to about 5.98 trillion. So majority of this growth, right, had occurred between 2011 to 2023, late 2023, where we saw that surge up to a 2.3 trillion, right? And so people would be asking, how come, what happened? How did this happen all of a sudden? So it was a time, I felt like there was a switch, right, between 2011 to 2023, right? Because as at that point, as at 2019, we are at 98 billion, right? But we saw that increase to about 2.3 trillion, right? As at late 2023 now. Different thing had occurred, right? First of all, we saw COVID-19, right? And so we saw a lot of rate drop, right? We saw a lot of volatility in the market. There was so much rate uncertainties, right? And so after that, we started seeing a lot of traction in the mutual fund space, particularly around the money market fund, because I mean, people were impressed that, you know, given the volatility we had seen, even among savings accounts, right, given as low as 1%, we still saw particularly the money market fund do like a 4%, 5%, right, which was relatively high at that point where we had a lot of global crisis. And so we saw a lot of SEC tightening, regulatory tightening. We saw a lot of tech advancements. We saw a lot of fintechs coming into that space to kind of broaden the mutual fund market. We also saw a lot of volatility in the market. So we saw money markets that would normally do we saw money market that will normally do 8%, 9%, doing as far as 22%, which was based on inflation rate and also MPR. And so we saw that sometime in late 2023 to at 2.3 trillion. We thought we had seen it all, right? But then we saw a 50% growth between 2023 to 2025, which was largely driven by inflation, right? A lot of uncertainties, like I earlier mentioned. And now we've talked about the numbers. Now let's talk about the number of funds, right? The surge in the number of funds. As at 2011, 2023, 2019, we're hovering around 30, 40 in terms of numbers. I'm talking about numbers in the mutual funds. But now, currently, as at 2025, we have vast over 140 numbers of mutual funds, right, ranging from money markets to balance fund, right, to Sharia compliant, to bond funds, and also sector-specific funds like the ETFs and an infrastructure fund.
Okay, that's really interesting. Thank you, Stella. If I heard you correctly again, 5.9 trillion, that's a lot. That's a lot. That's a very, very large market. And I'm wondering, for the people listening to us today, how much of your money is making up of that 5.9 trillion? But let me take the conversation now to Nzube. Nzube, you're a wealth manager, and I just want to ask you, in your estimation, what's the investors' appetite towards mutual funds?
Thank you, Brenda. Thank you for the question. All right. So investors' appetite towards the mutual funds, has been growing, right? Especially amongst retail and institutional clients. But I mean, this appetite is actually impacted by a few factors. The fact that investors see this mutual fund as a means to diversify, right? Also, the fact that the mutual fund generally is a very professionally managed fund and also offers investors accessibility to their funds when it's needed, right? Also, the fact that the mutual fund is a bed for different segments, risk categories of clients. Where we have the conservative clients or investors would opt for the money market fund or the bond fund, while those who are quite aggressive, the aggressive investor won't take quite a few risks, would go for the equity or the sectoral fund. And also, one of the most important things is the fact that there's this increase in awareness. So the financial literacy efforts, like what ICO Capital is doing today, of course, to make sure that our investors know a little bit more about this fund. So these efforts, financial literacy efforts, has also improved our investors' understanding and confidence in this mutual fund. So they're asking us, we want to give me options. Of course, my colleague just read out some very, very tasty numbers, the growth trajectory from 2011. This is people want to know more about this fund, really. Yes.
Okay. All right. Thank you. Thank you for shedding light on that, Nzube. As you can see, we have over 100 people here, and that's just testament to what you're saying. So to the people watching us, please remember to drop your comments. We're taking notes of your questions as well, and we'll take that immediately we are done with the questions we have here. And I know someone may just be thinking right now, okay, they are telling us so much about these mutual funds. Can they tell us the risks that are involved, in investing in a mutual fund? And so I'm taking the conversation now to Ronke. Ronke, looking at the various mutual funds, what kind of risks do each of these funds hold? Can you tell us about that?
Okay, Brenda. So I'll take it this way. I will start with some of the risks that are common when you're investing in a mutual fund, then I will tell you what kind of fund is exposed to that particular risk and how to protect yourself against this risk. Now, the first risk I'll talk about is general market risk. Markets can be quite unpredictable. You can have government policies, economic events, even global events, like my colleague Stella mentioned COVID-19 earlier. So these events can happen and then affect the prices of assets that you have in the fund that you have invested in. It can this risk is common to all mutual funds that we've talked about. It could happen in the money market fund. You could see that if interest rates fall and then the yield on your investment starts to decline. It could also affect the equity fund as well. If you have a market downturn and it affects the value of the equity that your fund has invested in. Now, the second risk that I'll talk about is inflation risk. In Nigeria, as at June 2025, inflation was at 22.22%. Now, there's the chance that your investment may lose purchasing power if your return is not higher than the inflation rate in the country that you're staying in. This kind of risk is usually common to funds that have low risk, like the money market mutual fund or the fixed income fund. Moving on, let's talk about liquidity risk. Now, this is the risk that your fund is not easily accessible when you need it. Sometimes some funds have lock-in period for you to be able to gain full benefits of your investment. So you need to make sure that the duration that you're aiming for aligns with the kind of fund that you're investing in. For instance, let me give an example now. It's not advisable for you to invest in an equity fund if you know that your goal is to save for rent in another 2 months. Now, I'll talk about credit risk. This is the risk that perhaps the fund manager you have invested in does not have the ability to pay you back. So this can happen if the fund that you pick is not regulated by SEC. So you need to do your due diligence to ensure that you're actually investing in a mutual fund that is regulated. They have a trustee that is there to ensure that they actually stick to the investment according to the trust deed. And then lastly, we have currency risk. So now, if you invest in the dollar fund, there's a chance that your Naira can either appreciate or depreciate, and this can impact the value of your investment when you convert your money eventually. Now, how can you manage some of this risk? To protect yourself against risk like market risk and inflation risk, you can do this by diversifying your portfolio. You can allocate a portion of your portfolio to money markets for safety, balanced fund for growth, Eurobonds to diversify your investments now and be able to achieve your overall goal. Another thing will be to match your goal to the fund that you're investing in. You use the money market fund for short-term goals, balanced fund for maybe medium to long-term investment. Choose reputable managers. You need to do your due diligence before investing in any mutual fund. You need to make sure that the fund manager is SEC regulated in Nigeria. You need to do your due diligence to ensure that there's a trustee, there's a custodian. All these things are done to put the fund manager in check. And then you also need to monitor your performance regularly to be sure that your investment is doing well. So this is some of the common risks that Nigerians face when investing in mutual funds.
Okay, thank you for shedding light on that, Ronke. I mean, Ronke has said it over and over again. You need to do your due diligence. But part of why we're here is because we want to also help you to make the correct decisions. Thank you for your questions. Thank you for the chats. We can see them and we're going to come to them very soon. Now, we've spoken about what mutual funds are. We've spoken about the various types of mutual funds, and we've seen, its size in the market, as well as the risks that are involved, in investing in mutual funds. Now, let me take the conversation to Stella. How does an investor determine what mutual fund to invest in, Stella?
I feel this question is one of the reasons why we are on this call, right? Because over time, we've seen a lot of investors just go with the trend, right? Equity funds are doing as high as 40%. I'd rather just be there, right? People are really moved by what they see, not really taking their time to do like due diligence in terms of why and how do I invest, right? And so there's various key points, right, to just take out before you going for any investment, right? But I'll just mention a few and then I'll try to structure in such a way that everything goes into the points that I'm about to say. The first point would be your goals, right? I have a particular money. What is the goal? Do you understand? What am I investing for? Am I investing for school fees, right? Am I investing to retire in the next 5 years? Am I investing to for emergency funds, right? Am I investing for rent, right? So you need to understand your goals, because it's very important to note that each of the mutual funds we have, particularly in Nigeria, right? They all have their specific objectives, right? And so it's very important that you understand your own goal, right, before you go ahead to invest in a particular mutual fund. Like my colleague said, okay, if you'd want to do like a short-term investment, you know that you have nothing to do with an equity fund, especially because you know that most of these funds are having locked-in periods, right? So you should be very careful, right? Understand your goal for the particular fund in terms of your investments, what you want to do with the money in either the long term or short term. The next thing would be your risk appetite. I mean, this cannot be overemphasized, right? Before you go into any investment, it is important that you understand your risk appetites. I do not like a lot of risk. In short, I don't like risk at all, right? It's like the national anthem we have here in Nigeria, right? So I see there is no reason for you going towards an equity fund, right? Or a bond fund that is a little bit volatile, right? So you would want to stick around the money market fund, right? Or even the balance fund, because one thing the balance fund does naturally is to give an edge, right, between equities and fixed income. We'll come into that shortly. And so it is very important to understand your risk appetite, because that way, right, when we have volatilities in some of these funds, because you have done your due diligence per time, right, you're not quick to leave the fund, right? And the next thing we want to look out for is the fund's track record. It is very important that you would want to make sure to understand the fund track record. How has it performed, right? As I earlier stated, we saw what happened during COVID-19. How did that perform? How did the balance fund perform? How did the equity fund? How did the Eurobond? Do you understand? You want to make sure that you've seen the track record of volatility, and then so that it helps you understand if it's something that you can stay, right? If it's something that is still okay for you or by you, right, before you go ahead and go into the fund. So understanding the fund's track record in terms of performance, right, and also volatility is very important. You know, we have something like the money market fund. You've seen how we performed even when we had that downtime generally globally, right? We saw how they still stayed relatively attractive. Right. And so we've seen that for the bond space, you know that there's so much volatility. So you want to ensure that it's something that you want to wait out, right, or do not even go in at all. The other point is fund manager. There are a lot of asset managers right now, right? So you want to make sure that you do your due diligence, right? It is very important that as an investor, right, there is a communication between you and the fund manager you're investing with, right? There's a two-way communication between the fund manager and you, right? And you are the fund manager. So it's very important that you've checked the market to understand in terms of experience how they've performed over the years, right? In terms of volatility, how have they been able to even keep their rates at par? In terms of compliance, right? Have they been in compliance with SEC laws? And that's why we have our fact sheets. You have fact sheets going on. You also have flyers, right? That kind of depict their yields every week, right? So it is very important to do your due diligence in terms of fund managers, right? You do not want a situation whereby you go back, right? Or you go back to the fund manager and then you hear stories, right? And that's because you are not taking out your time to do your due diligence. Rates are very important, right? And sometimes you see some crazy rates like 28%. You don't even take out time to say, okay, yes, they're doing, but what has been the experience in the market, right? Until you just jump in and then you jump out. So it's very important. Another thing that most people do not get to talk about is fees, right? Each of these funds, right, especially specific sector-specific funds, right, they have their fees, right? Although these fees are structured, right, structured by SEC, right, making sure that we do not go to more than a particular percentage. But it is very important that you understand the fees and also the methodology of the fund, right? So that way you don't get carried away when you're doing your calculation as a person and you're saying, okay, this is what I expected, I got less, right? So you need to understand the fee of the fund, and that's why you see a lot of fund managers, they give out daily articles, also different fact sheets, right? That just helps you stay updated. So it's very important that you go through it. And then another thing is liquidity. Like I earlier mentioned, you've gone through your goals, right? This is what I want to achieve: short-term, long-term, medium, right? You want to ensure that whatever fund you are placing it with, right, in terms of liquidity, you're able to get it back when you need it. Because I see a lot of people going to the equity fund. I see a lot of people going to the bond space, the bond fund rather, and they don't really understand the intricacy of these funds. And most times when they want to go in, right, they are stopped because you can't go out of the fund because there's a specific lock-in period. So it's very important generally to understand why you want to invest and then you match it with your how.
Wow. Thank you so much, Stella. Just to reiterate some of the things that you have said, that in making the decision as to what mutual funds to invest in, an investor should understand what the goal is. What is the goal of your investment, your risk appetite, the track record of the fund, you know, and then the fund manager. Who is the fund manager? And then, of course, she talks about fees and liquidity. Thank you so much for that, Stella. Let me take the conversation to Nzube. Nzube, I mean, you are the market-facing person for ICO Capital. My question to you is, which of the mutual funds is most popular and why?
Thank you, Brenda. Very, very good question. All right, so the most popular mutual fund, in Nigeria and in many emerging markets is actually the money market fund, the famed money market fund. And the reasons are not far-fetched. The fact that it takes care of pretty much everybody in the risks band, those who are risk averse, those who just want to keep their money short term. I mean, it gives you high volatility also. The fact liquidity, right? So if you invest the money and after a short while you need to access your fund to take care of things, of course, the money market is the way to go, of course. And the fact that it offers better yield than what you have in your regular savings account, and the fact that investors see this money market, as a safe place to park idle funds is a very, very key thing, right? And the fact that, my colleague mentioned about, market volatility. During that times, the money market is actually a very good, place. And the fact that, during interest rate hikes too, the money market, is also a very, very good place to keep funds. So that's why, it's quite popular amongst our investors. But there's been a slight change, recently, where we've had quite a few inquiries about the balanced fund, particularly the ICO balanced fund, due to the fact that it's performing well due to the equities side of the fund. So recently, we've had quite a number of inquiries. But generally speaking, the money market fund is actually what our clients, what investors, usually opt for.
Okay, all right. Thank you, Nzube. So Nzube is telling us that as a wealth manager with ICO Capital, we in his experience, the money market fund is the most popular. So let's talk about the ICO money market fund now. Let's go into it. Let's understand it. And I'm going to be talking to Stella about this. Stella, there are a lot of people listening now, and in fact, I'm sure if you can look through the chat room, you can see some people already asking about some of these funds. What do we need to know about the ICO Money Market Fund, and why should anybody invest in it?
Thank you, Brenda. The money market fund, the ICO Money Market Fund, is low risk, right? We are invested in short-dated instruments like the treasury bills, commercial papers, the bank placement, also short-term government debts, right? Now, this fund is designed to preserve capital. So if you want steady growth, right, in terms of your fund, your volume that you place with us, right, but you still want some sort of capital preservation, you want your money preserved, you don't want anything to happen to your money, whether there is high volatility or low volatility, then the money market fund is for you, right? In terms of liquidity now, we have it's a very liquid fund, right? Redemption is typically done between 24 hours, right? Or definitely the next day if there are bank issues, right? And now most people would be asking, we heard about money market fund, how much do I need to start my journey with the ICO money market fund? With as low as 10,000 naira, you can literally just start your journey with us at ICO Capital, right? In terms of methodology, it is very simple. All you just need to understand is the simple interest principal times time times rate would give you basically your accrued interest over time. Now, it has fixed price. So that means if I go in at 100 naira, you're exiting at 100 naira. It is very, very simple to understand. Now, let's look at the historical performance, right, over the period. As at 2023, right, we're hovering around 669 million, right? But currently we are doing as high as 23.6 billion, right? A lot of people would say, how is that possible for such a growth over a long period of time, or short period of time rather? It just kind of shows that we've executed proven strategy that has worked in the market, right? So we've built over time, we've built a lot of strong investor confidence, right? That has helped to grow the fund. What we've tried to do here in ICO Capital is to make sure that for the money market fund, which is the greatest fund generally in Nigeria right now. So for the money market fund, our money market fund, we've tried to make sure that we've kept rates, right, over time as competitive as possible, right? Make sure that we are beating benchmark, right? We're also making sure that we are staying above our peers, right? To give that expected return for our clients. So that has kept us abreast in terms of return. Now let's talk about the yield, right? We've seen that trajectory growth, even when we had volatility, we had COVID-19 coming, we had a lot of volatility in the market. What we've tried to do is to make sure that we are aligned with the market, right? If not even above the market. So one thing we do is we look at our strategies, and we're able to look at what will go in the next 3 months, or what can happen in the next 3 months, right? And we're able to see how we can mitigate that and make us at par, right? If not very competitive among our peers, right? Currently, we are doing as high as a 20.2%, right? So if we check generally in the market space, you can literally see rates move around 16, 19%. Just very few players are on the 20%, of which IPO money market fund is part of. So one thing we've done, right, is to make rates as competitive as possible, and liquidity in terms of withdrawals as easy, right, and as seamless as possible. And so, like I said earlier, with as low as 10,000 naira, you can start your journey with us, and you should start now. Thank you.
Okay, thank you so much. With as little as 10,000 naira, you can actually begin your journey with the ICO Money Market Fund. Well, thank you so much, Stella. I think that you have touched on basically everything we need to know to be able to make an informed decision. So let's talk about the Eurobond Fund now. And I'm taking this conversation to Ronke. Ronke, you had mentioned earlier in passing about this fund. So let's talk about the ICO Eurobond Fund. Tell us all about it, what we need to know to be able to make an informed decision, and why we should invest in the ICO Eurobond Fund.
Brenda. Okay, so before I start to market the ICO Eurobond Fund, let's just take a look at the problem that has brought us to the point of innovation of this fund here. As Nigerians, I'm assuming most of us here are Nigerians, we've all faced issues regarding foreign exchange volatility. Now, let me give you an example. Imagine you had a USD application of $10,000 about 2 years ago. For you to have been able to purchase, or $20,000, for you to have been able to purchase that amount about 2 years ago, you'll have needed an average or around 9 million naira, which is an average exchange rate of 450 naira to a dollar. Now, with the current market reality, if you want to buy that same $20,000, you would need roughly 30 million naira, considering that the exchange rate is now about 1,500 naira. That means that the value of your naira has deteriorated significantly from what you would have had 2 years ago. And then we see that Nigerians are mostly looking to relocate or study abroad. This is obviously a problem for them. Now, we started to see that investors start to diversify their portfolio across currency and try to invest in assets like Eurobonds, USD deposits placement. Now we have a new problem because the minimum requirements for you to be able to invest in those asset classes, you can see as high as $10,000 for you to be able to invest in a USD deposit, or even $100,000 or $200,000 for you to be able to buy Eurobonds. And this amount of money is not easily accessible to the average Nigeria. And this is where the ICO Eurobond Fund comes in now. With as little as $1,000, you're able to diversify your portfolio across different currencies. The fund was launched in 2024. Yeah, we launched this fund to help investors to lower the barrier to investments in these assets. The ICO Eurobond Fund, now we invest majorly in assets like Eurobond. Those are debt instruments that are issued either by corporate entities or the government. Yeah, these instruments are low risk, medium risk, and they also help to generate stable income. Now, as an investor, if you say that you have up to the minimum requirement of $100,000 and you try to invest in the Eurobonds market by yourself, then don't forget that you're also faced with some risk like market volatility. For instance, since the start of this year in January, when the US president was inaugurated, we've seen that the Eurobonds market has been so volatile. There's been a lot of issues from tariff wars to concerns regarding when the Fed would cut rates or not. So if you don't have professional management, you might not be able to handle this. Now, let's go to the other asset class that the funds invest in. If you try to invest as an individual for client in USD deposits, you would get rates about 1%, 2.5% for as long as a year. Now, IQ Capital as a fund manager, because we're able to aggregate money from a lot of people and we have relationship with these counterparties, we're able to negotiate a better return on that money so that we're improving your return while we're also helping you to manage the risk. Now, another thing to note is that there is no exposure to equities in this fund because we don't want our investors to be exposed to excess market volatility. So it's quite safe for an investor if you have low to medium risk appetite. It's basically a fixed income fund, but it just helps you to generate your income in dollars. At the end of the year, your annual income would be accumulated and then distributed to investors every year. So now you have the option to either reinvest this dividend in the mutual fund or collect your dividend now as cash. Now let's take a look at the performance since the inception of this fund in 2024. In the first year, IQ Eurobond Fund returned an average of 6.5% net return. So if you compare this to what you would have earned by investing in a USD deposit placement by yourself, or even by investing in the volatile Eurobond market, you will see that the IQ Eurobond Fund has actually outperformed. Not also forgetting the fact that there's a possibility that you could have even made a loss on the Eurobond market if you were not careful enough. Now, we saw that our clients were very impressed with this performance in the first year. And in 2025 so far, we've seen growth, significant growth on this portfolio by about 140%. It shows that our investors are quite confident in the competitive yield that we offer and the stability that we provide in terms of income to them. The average yield in 2025 has also improved significantly. We've consistently seen an average that is above 7.3%. Now, if we look at the industry average, which is around 6.7%, you also see that we're outperforming when you look at our peers as well. Now, we also have the benchmark and then the US inflation, which is currently at 2.7%. With a return of 7.3%, you can see that you're doing way better than inflation, which means that you're actually getting real return on your money and then with minimal risk. Now, what are some of the things that you should take into consideration before you invest in the IQ Eurobond Fund? Usually, USD settlement is quite different from what we have in the local settlements, the local settlement time. And because of this, your liquidation would usually take about 3 to 5 working days for it to be processed. So you need to make sure that you are requesting for your money before you need it so that your funds can get to you on time. You also need to note that there's a lock-in period of 180 days. This lock-in period helps us to plan properly and help you earn full benefit of your money without affecting other unit holders if you come and say you want to liquidate before the end of that lock-in period. Now, we like to make things very convenient for our clients, and because of that, we've made sure that we put in place different ways for you to be able to subscribe to this fund, which is not so common in Nigeria because of the dollar issue that we also see. Now, there are 3 ways for you to be able to subscribe into this fund. You can either transfer your dollars to our custodial account, which is with RMB, or you can make a cash deposit. You can buy your dollar. If you have your dollar in cash, you can take it to the bank and deposit it. There's also a third option where if you have Naira and you're not sure on how to convert your money to USD, you can come to one of our wealth managers and they will assist you on the process on how to be able to convert your money and enter this fund so that you can also start to earn returns in dollars. Thank you.
Wow, thank you, Ronke. Thank you for making that, breaking that down so well for us. I'm sure people are paying attention to the conversation that we're having, and this is going to help everyone to make a more informed decision. So let's talk now about the balanced fund. I can see someone asking in the chat room, I need details about the balanced fund. So this one is for you and for everybody else listening. And I'm taking the conversation back to Stella. Stella, tell us everything we need to know about the balanced fund, the ICO balanced fund, and why we should subscribe to this fund.
Okay, so the ICO Balance Fund, right, is designed for investors who want both a mix of growth and income, right? I don't want to be too aggressive. I do not want to be too conservative like the money market fund, right? I just want to be in the middle, right? I don't want to take so much volatility from the equity space or even the bond fund, right? Then the balance fund is for you. Now let's talk about how the balance fund works, right? Now think of the balance fund like a hybrid engine, right? Where there are two fuel types, right? You have the equities, right? And also the fixed income instruments. Now, these equities are not private equities, right? They are company shares listed on the Nigerian exchange, whereby if you click the Nigerian exchange website, you would see the list of stocks that were probably invested in the balance fund, right? Also, in terms of the fixed income instruments like the treasury bills, bonds, and high quality government and debt, and also a little bit around the corporate debt, right? Now, the idea is to combine the growth potential of the stock market with the stability of the fixed income market, right? So your money grows steadily without the stomach churning volatility of investing directly into the equity space. Now, let's look at the structure and allocation of the balance fund, right? Now, we have regulations driving each of these funds. And then for the balance fund, right, we are typically supposed to be invested either both in the equity space and also the fixed income space, right? We have ranges of which you cannot go beyond. Now, the balance fund is actively managed, right? So that means that daily, right, there is a daily check, right, in terms of rebalancing and all. So let's move now to the valuation, right, and the pricing of the fund. Now, initially, I had said that the money market fund has a particular price at entry and also at exit. So that means if it's 100 at entry, you're probably doing 100 at exit, right? So no problem. But then the balance fund has a different methodology whereby we have an entry price and an exit price, which is called the offer price and also the bid price, right? In terms of the price, most times the offer price, right, is not always the same as the bid price. Now, the bid price can be higher or lower. It just depends on what level you are redeeming from, right? And redeeming at that particular point in time. Now, in terms of the lock-in period and access to fund, it's not like the money market fund where you can just always take out your money, right? For the balance fund, there's usually a lock-in period of 90 days, right? And so if you are coming into the ICO balance fund, right, and you come in today or probably have the goal of investing short term, the balance fund might not necessarily work for you because most times you have to be in the fund for 90 days to be able to see that growth, right? Capital growth and also stability in income. Also, in terms of a lot of people, I hear a lot of people saying, how can I start my journey? In terms of starting your journey with the balance fund, with as low as 50,000 naira, you can start your journey with the ICO balance fund. It is safe, right? I hear a lot of people saying, I want to do a lot of equities, but I don't have the mind, right, to go through it, right? The balance fund is for you because that way you are hedging against the volatility you see in the equity space, right? I hear a lot of people say things like, oh, okay, I probably want to do a Nigerian investment, but I'm scared of inflation, right? What if inflation, you understand, takes part of my money in such a way that the value I have today is not the same value I'd have tomorrow, right? The balance fund, what the balance fund does is to make sure that at least you are kind of at par with inflation, or if not higher than inflation, right? Which is a good thing, because you want to make sure that the value of your money speaks for you, no matter the period you would need your money in. And so that's why the balance fund, right? It's safe, right? Safer than most of the equity funds, right? Or even the bond funds that we have in the market, right? So we're expecting your money, right? Which is as low as 50,000 naira, you can start your journey with us. It has an offer price and a bid price. So you want to understand that, and so that you can wait it out. Most times we see a lot of people come in and they want to leave the next week. So the balance fund is not a place where you can come in and you want to leave. You want your money to grow, right? And have some sort of value, right? And so we create a locking period so that in terms of volatility trend, you see that volatility unwind, and you see that movement. The balance fund is not a place where you would want to put and then expect surge in yield, right? It's not done that way. And so the balance fund is a place where you would stay medium to long term, right, to see that reward. Thank you.
Okay. All right. Thank you. Thank you so much, Stella. So we've talked about the money market fund. We've talked about the Eurobond fund, as well as the balanced fund. So I want to feel the pulse of the people listening right now. And I think right about now, you're going to be getting a poll on your screen. I'd like to know, which of these funds do you think you would want to invest in? I want you to vote on the screen. I think you're going to be getting your poll just in a few minutes. And then I want to know which of these funds do you think that you would want to invest in. Like you have heard, for the money market fund, with as little as 10,000 naira, you can get started. You can start your investment journey with the ICO Money Market Fund. For the Eurobond fund, with as little as $1,000, you can start your investment journey. While for the balanced fund, with just 50,000 naira, you can actually start your investment journey in that fund. So you can see, when we talk about investment, sometimes people think that, oh, it's only for the millionaires, but with as little as this, you can actually start your investment journey. Stella, I know you've been talking for a while now, but I'm still going to stay with you just a little longer. We've heard so much today. We've heard so much about mutual funds. But my question to you, Stella, is why ICO Capital? Why should anybody want to invest or bring their money to ICO Capital? What's your selling points?
Okay, like I earlier mentioned before, right? We see a lot of asset managers in the space, right? We even see a lot of fintechs trying to, position for the so-called reality check, right? We witnessed over the period, especially after COVID-19. So it's very important that you choose a fund manager like ICO Capital, right? Which has stayed over the years and has delivered competitive returns, right? Over the years, especially our mutual funds, right? We've tried to stay top tiers, right, in the industry in terms of yield, right, or even average yield, right? We've tried to outperform our competitors. Which makes us, you want to ensure that whatever you're doing, right, in terms of investment and in terms of growth, right, you are seeing that reward for staying in the fund, which is something that we've tried to do. Another point would be strong fund management. We have trained seasoned professionals, right, who actively monitor the market, from the equity to the fixed income market, making sure that we see opportunities even before they happen, right, and take positions, and so that we can deliver some expected return or a minimum expected return for our clients, right? The next thing would be transparency. This needs to be overemphasized, right? Like I said, communication is very key, right? So one thing we've done in ICO Capital is to make sure that our fact sheets, right, are readily available on our websites, right? We have market reports that go out every day, informing you on how markets react, and also recommendations, right, based on market reality. We also, one thing we've prided ourselves in is to make sure that in terms of liquidity, right, we make sure that in terms of withdrawals, we do not have withdrawals go beyond 3 days, right? For the mutual funds, we try to make sure, especially the balance fund and also the money market fund, we try to make sure that once we have withdrawal needs, we make sure it's available to you within 24 hours, right? And also all our other funds, make sure that between 24 hours to 72 hours, we have that availability of fund. Now, in terms of flexibility, I am risk averse. I take some amount of risk. I take high amount of risks, right? We have every product for you, right? So we've done it in such a way that we've gone out to look at the different risk mandates of our investors, right? And we've tried to make sure that there are products that would suit your goals, right? And also your risk appetite. The last one would be proven track record, right? We've seen that track record over the period of time in terms of AUM growth, right? Which kind of just shows proven strategies that has worked for us over the years. And now I'm just going to list one more, which is customer support. We have our app, right? Our ICO Invest app, right? Which makes it readily available to you. So you don't need to start calling to see, oh, has my fund grown? Has it improved over the period of time, right? We have the ICO Invest, right, that can answer your questions. And if you feel like you still have complaints, right, we have our customer support, right, which is accessible every time and anytime you want to talk to somebody. Thank you.
Okay, thank you so much. Thank you, Stella, for that. Again, if you look to your screen, I'm sure you have the poll up. You want to vote on which of these mutual funds you like to be invested in. I can see that it's quite tight right now where it is. About 40% of people are going for the ICO Money Market Fund. 45% are saying the ICO Balance Fund, and then 15% the ICO Eurobond Fund. But we need more responses. So just look to your screen and just vote on which of those funds, based on everything you've heard so far, which of those funds you think you would love to invest in. And that brings me to, and we're wrapping this up now. I'm going now to Nzube. Based on the polls, I mean, we still have votes coming in. A lot of people are showing interest in investing in the mutual funds. So what are the requirements to invest? And now I'm talking documentations. What requirements do they have to submit or show to be able to come into this investment?
Thank you, Brenda. So we have an app my colleague mentioned, ICO Invest app. So on the app, any potential investor could, sign up, get themselves onboarded and start their investment journey quite seamlessly. But I know that we might also have quite a few conventional investors that want to do it the other way, filling the form. So we would require the investor, the client, to complete the mutual funds subscription form. Of course, we would also require their valid means of identification, which is any government-issued ID card, the international passport, the driver's license, the national identity card, and the INEC voters card. Any of those four would suffice. We'd also require a very recent passport photograph. We'd also require them to give us any utility bill for proof of address. Yeah, so just to also mention that we also onboard institutional clients, right? I mean, institutional clients, we get onboarded in the mutual funds, right? We require their CAC documents. Of course, we'll be able to relate with them, if we have any of such requests. We'd also onboard minors, right? People below the age of 18. So if we have investors here who want to invest for their wards or their children, of course, you could come on board. We just require the children's birth certificate and of course the KYC of the guardian or the parents. We'll also onboard joint accounts. So if you have two persons who want to open a mutual fund account, we could also onboard them. We'd also have a provision for estate accounts. If we have any investor who want to open an account, mutual fund account for a deceased loved one, of course, we'll also help them facilitate that. Thank you.
Okay, thank you so much to my panelists. I'll go to the chat room now. We have so many questions coming in, but I also know that some of these questions were sent in before we took some of the questions from our end, and so some of them have already been answered. However, I will just read out some of the questions that I think are still relevant, and then, I mean, any of the panelists who want to respond to this should just help me by doing so. Please also continue to vote. We have more responses in, and the more the response is coming in, the funnier it gets, because I mean there's this struggle between the money market fund and the balance fund, and I want to see how that is just going to pan out. So please check on your screen and do well to vote which of these mutual funds would you be investing in with ICO Capital? So let me try to take some of the questions now. I'm trying to check for it. Somebody is asking, I think this is Chidi Eke. It says, could you please advise on the most suitable money market investment options for a time horizon of 5 to 8 years, considering the goal of saving for education? Who's going to take that? Stella, are you going to help us with that?
Yes.
5 to 8 years. Okay.
Okay, so the thing we need to understand about the money market instruments is that most times it's a short-dated instrument. That means it runs between, doesn't move above 365 days, right? So in terms of a 5 to 8 year horizon, it's something that you really need to sit down and ask yourself if you really want to do a money market investment. Because here's the thing, right? I invest at 21% today, right? Because it is short dated, right? That means between now and 365 days, you have your maturity. That means you probably can either do rollover rates, you can either be lower or higher, right? So in terms of that, you probably want to stay around the money market fund whereby there's some sort of hedge, right? And there is an asset allocation that speaks to that, right? But in terms of going straight into a particular money market instrument, I think that's for 5 to 8 years. I feel like there's something that you really need to think about, because there's something called reinvestment risk, which is very, very prevalent in the money market instruments. And so rates changes over time because most of this instrument does not go between 1 year.
Okay, thank you. Thank you so much, Stella, for that. I'm sure that Chidi Eke, you can also still reach out if you want further details on this. Now we're trying to manage time as much as possible. So some of the questions will be answered via the chat room. And people, I know I've seen a lot of questions. Would there be recording? Yes, you're going to have recordings. How can I access money market fund? Which platform gives a good rate? I'm sure you have heard it all today. ICO Capital is a place to be. How do I access the Euro bond? I think Ronke has already spoken to that. If you need further clarifications, Unzube, please, you do well to also drop your phone number and maybe your email address in the chat room as well, to be able to help with some of these questions. It's past 1 hour and we're trying to keep to time. If one invests in a balanced fund, how soon can one have access to his funds? I think Stella answered that in the course of her presentation. Okay, let me just see. Somebody says, I want to start my investment journey. Please guide me. What do I need to know about that? That has also been answered. Wrong care. Someone is asking about the Eurobond fund. Is it a one-time payment for subscription, or can I keep topping up as months go by? If I'm not able to drop a lump sum at once, and if I want to start, is there an app? Okay, so Ronke, do you want to take a shot at this in less than 2 minutes, please?
Yes, please. Okay, so investing in the Eurobond fund is not a one-off payment. You can start your journey with as little as $1,000. After that, your new minimum is $500. So you can invest in multiples of 100. Like after your first subscription, you can invest $700, $800, just in multiples of 100. You also asked if you could be topping up. So yes, you could top up your investments as you like. You asked if there's an app. There's an app, the ICO Invest app, which my colleagues have earlier mentioned. It would show you your accrued interest on a daily basis, as well as the yield on the fund for that particular day. So you'd be able to monitor your investment properly. So you can start your investment journey with the ICO Eurobond fund.
Okay, thank you. Thank you so much. Somebody is asking, and I'm just going through the chat room. So how is returns on the balance fund paid? Is it monthly, quarterly, or annually? Stella, do you want to respond to that?
Yeah, so it's paid annually.
Okay, all right. Thank you. I like that. What is the percentage? Okay, Stella, I'm going to stay with you on this one. What is the percentage of return for the balanced fund? I don't know if you spoke to that.
Okay, so for now, right, so a year-to-date return of a 30.43%, but please note that that's as if you had been in the fund as at 31st, or rather 1st January 2025 till now, right? If you are enter now will probably be around the 12%, right? So you should understand that most of these funds that we put out, especially for the balance fund, it is year to date. That means if I had been in the fund from the beginning till now, 34.43%.
Okay. We have so many questions, but we can keep the conversation going. Please feel free to send. I think Nzube has dropped his details in the chat room. Feel free to reach out to him as well to ask some of these questions. And remember that we are also on social media, so you can send us a DM via Instagram. We're at ICO Capital NG, or on X. We're also on LinkedIn and on YouTube, ICO Capital Limited. So you can actually just send us if you're not satisfied with some of the answers so far, or if I was unable to take your questions, please let's keep the conversation going, and let's connect. Please, we're really excited to onboard you on the ICO Eurobond funds and the ICO Money Market Fund, as well as the ICO Balanced Fund. So please feel free to send us your questions, your concerns, or whatever help that you may need. But thank you so much for spending your afternoon with us today. We've done over 1 hour, and we promised not to take more than that. So thank you so much. Like this is just the second episode of our webinar series. So we're going to come your way again pretty soon. And until we do that, please have a very good afternoon. And before I let my panelists go, please, final words from my panelists. I'm going to take final thoughts, final words from Ronke, then I'll go to Nzube, and then to Stella, and then we'll call it a day. So Ronke, final words.
Okay, my final word is to just start now. I know we hear that a lot, and we are often fond of saying, I'll just do it later, I'll do it later. But what you don't realize is that later sometimes might turn to never. And your future depends on what you do today. So you just need to start and start building your wealth.
Thank you. Thank you, Ronke. Ronke says start now. Start now. Don't overthink it. Don't overplan it. Just start now. Start with the little that you have. Understand how it works, and then grow your investments. Thank you for that, Ronke. Nzube?
Yes, thank you, Brenda. So I mean, we at ICO Capital, we are ready to help our investors, our clients, to get to that to start the investment journey and also get to their investment destination, because there's always a destination. So we are here to offer them every single thing they need to make sure they get and achieve their investment goals.
Fantastic. So Nzube says, I'm here for you. You have my phone number. Reach out to me. I'll be happy to help. Final words, Stella?
Moving with the trend is very important, right? Everybody loves money, right? But before you go into every mutual fund or any mutual fund that you'd want to go into, it's very important that you understand why you want to invest, and then you match it with the how. Thank you.
Wow. So Stella is telling you, do your due diligence, take note of the things that you have learned today, even as you start your investment journey. My name is Brenda Egwahide. It has been a pleasure spending this afternoon with you. Until we come your way again, enjoy the rest of your day. Bye.